You're listening to the Productive Entrepreneur Podcast. I'm your host, Tanya Kendrick, and I'm on a mission to help online business owners like you focus on the right things and take imperfect action. Every week, you'll get my best tips on everything from time management and content creation to planning effectively and managing mindset issues, all in an effort to help you become more productive. So let's jump into this episode. Found yourself surrounded by a pile of receipts, with your eyes glazing over, staring at your numbers, realizing that they don't add up the way you'd hoped. If you have, then you understand that feeling of a financial wake-up call. That moment when you realize that understanding the ebb and flow of cash in your business is just as crucial as the quality of the products you pour your heart into. As solopreneurs, we're often the CEO, the marketing department, and the customer service team all rolled into one. We're so busy chasing our passions, connecting with customers, and juggling tasks that money management can fall through the cracks. But let me tell you, getting smart about your finances isn't just a good idea. It's the bedrock of business success. So today I want to share with you 5 money strategies to elevate your business. We'll walk through each strategy together, from the art of budgeting to the power of diversification. And I'll show you how to apply these to your own business plan. By the end, you'll be ready to tackle your finances with confidence and maybe even a bit of excitement. Oh, and before we move on, let me mention that you'll find links to everything I talk about in the show notes at tanyakendrick.com/10. You can also grab a free cheat sheet that summarizes the episode and includes the answers to some frequently asked questions. So let's dive into these actionable steps and get your finances in tip-top shape. Your future self and your accountant will thank you. Strategy number 1, embrace the art of budgeting. I know, that word budget, it might make you think of cutting back on good stuff like eliminating that splash of caramel in your morning coffee. But what if I told you that a budget could be the most liberating thing you introduce to your business? I'll be honest, I did not create a budget when I started my business. I was actually a couple of years in before I tackled that task. I was kind of like deciding to finally organize the junk drawer in my kitchen. Necessary, but not something I was really excited about doing. But as I categorized my expenses and projected my income, something magical happened. The fog of financial uncertainty lifted, and I could see my business's future with clarity. And for the second piece of honesty, that future didn't look great. My expenses were way too high as a percentage of revenue. And that's the moment that I had that financial wake-up call, that moment that I realized something had to change. Creating a budget isn't about restricting yourself. It's about understanding your business's financial flow. It's about making sure that you have enough to invest in those marketing campaigns that introduce your products to potential customers, and making sure you have enough to cover all of those software subscriptions that keep your operations smooth. Oh, yeah, and that you have enough money to pay yourself and turn a profit. A budget helps you predict cash flow, prevent overspending, and ensures that you're not caught off guard by unexpected expenses. Now let's get down to brass tacks and create a budget that works for you. Here's a step-by-step guide to setting up a budget that even the most number-averse business owner can handle. 1. Calculate your income. Start with how much you're bringing in. Look at your past sales. Consider seasonal fluctuations. And be conservative with your estimates. If you've got recurring revenue from clients or a steady sales figure, that's your baseline. 2. List your expenses. Every penny you spend to keep your business humming is an expense. This includes direct costs like inventory and indirect costs like internet service. And don't forget to factor in variable expenses. These are business costs that fluctuate, like advertising initiatives or special seasonal offerings. 3. Determine your profit. Income minus expenses equals profit. This is the money that you get to reinvest back into your business, save for a rainy day, or pay yourself for all your hard work. And 4, adjust as needed. Your budget should be a living document. As your business grows and changes, so will your budget. Regularly revisiting and adjusting your budget is super important to staying on track. And here are some tips to stick to your budget once you've created it. Use a budgeting tool. I have a spreadsheet-based system called the Ultimate Business Budget Toolkit that can help you plan your budget and stay on track. If you prefer an app, I recommend You Need a Budget, also known as YNAB. I'll drop links to both of those in the show notes. Regular reviews. Set a date with your budget. Maybe it's every Friday morning. That's what I do. I call it Finance Friday. Reviewing your budget regularly. Make sure you're on track and that you catch any issues before they become problems. And then be flexible. Sometimes opportunities come up that require a little financial wiggle room. It's okay to adjust your budget as long as it's intentional and not just a whim. For example, I just found out yesterday about a great deal on an app that will help me do something I've been wanting to do for quite a while. This is a one-time deal and it's only available for the next couple of days. I didn't have this purchase in my budget because I didn't know this deal was going to come up, but I'm probably going to go ahead and buy it anyway. It's a piece of software. Because, like I said, it's something I've been wanting to do for a while, and it would be short-sighted of me to ignore this opportunity to get this software. So just keep in mind that your budget is there to guide you, to keep you on track, and help you make smart decisions that will ultimately grow your customer base and your business. And for more budgeting tips, check out episode 9 of the podcast. It's all about budgeting tips for solopreneurs, and I'll drop a link to it in the show notes. Strategy number 2, invest in growth. Investing in your business is, well, it's a bit like adding a new room to your house. Initially, it might seem like a big undertaking that requires a lot of effort and expense, and it is. But once it's done, it not only adds value to your home, but it also enhances your living experience. You've probably heard that saying, you have to spend money to make money, right? But when is the right time to do that? Well, let's flesh out that analogy we just talked about, the one about adding a room onto your house. So imagine your business as it's a cozy, well-loved house. It served you well, but you're starting to feel a bit cramped. You need some more space to grow, to entertain, to thrive. This is where strategic investing comes in. It's like deciding to build that sunroom you've always wanted. Yes, it requires resources and planning, but the added space opens up new possibilities. Maybe it's a place to entertain more guests, to relax, or even grow a little garden. I always need more space for houseplants, so now I really want a sunroom. In business terms, this means investing in areas that expand your capabilities, reach more customers, and ultimately increase your revenue. So where should a solopreneur focus their investment dollars? Well, education and training. This is like reinforcing the foundation of your house. Strengthening your knowledge base with a new course or training can solidify your business and prepare it for more substantial growth. But let me add a caveat here. You have to actually go through the training and implement what you learned. Course hoarding doesn't help you. Buying a course that you don't take is not a good investment. Marketing. Think of this like sprucing up the outside of your house. Effective marketing strategies help in showcasing your brand to prospective customers, drawing them in with the promise of what's inside. And then outsourcing. This is like hiring a landscaper or a cleaning service. Outsourcing tasks like accounting or graphic design frees up your time so that you can focus on the core areas of your business growth. And in fact, hiring people for things like yard maintenance or to clean your house can be good investments for solopreneurs. Those tasks are typically easy to outsource, and that frees up your time to spend on the business. Just some food for thought. So let me share a personal experience. My best investment in 2023 was an artificial intelligence app called Marketing Magic, and I'll drop a link to that in the show notes. I've been using AI for a few years now, and it has really freed up a lot of time and mental space. But one of the things I struggled with was creating good marketing copy, particularly for sales pages. Marketing Magic promised to solve that problem, so I got in on the ground floor when it was first introduced. It was a little bit of a risk because I wasn't sure how well it would work, and there was no money back guarantee. But it turned out to be a great investment. The app has continually been improved, and I use it every week, usually multiple times a week. I initially bought it for the sales page piece, but I've ended up using it for a lot of other things, like repurposing my podcast episodes, writing emails and social media posts, and so much more. So it saves me a lot of time. It also saves my mental energy because I don't have to dread writing sales pages anymore. Investing in your business is about making wise, strategic decisions that not only add immediate value, but also set the stage for future growth and success. It's about understanding when and where to put your resources to expand your business's potential, just like thoughtfully planning an addition to your home. Okay, let's move on to strategy number 3. Cultivate multiple income streams. Because let's face it, relying on a single income stream is like walking on a tightrope without a safety net. Exciting? Maybe. Stomach churning? Possibly. Risky? Definitely. I've always followed the philosophy of don't put all your eggs in one basket. I follow this for everything, but it's especially important when it comes to your business. Think about what would happen if your primary source of income took an unexpected hit. It's something that so many people have seen, especially in the online world. Recently, bloggers have been going through a tough time with Google's helpful content update. A lot of blogs lost huge amounts of traffic pretty much overnight, and if they were relying solely on ad revenue, then their income took a nosedive. I have seen so many posts about this in Facebook groups. Diversifying your income streams is like having multiple safety nets beneath that tightrope. If one fails, you've got others to catch you. Relying solely on one income stream can leave you vulnerable to industry shifts like algorithm updates. It also leaves you vulnerable to economic downturns or changes in customer preferences. Diversification gives you a buffer against those uncertainties. It also opens up new avenues for growth and innovation. So, how can you create multiple streams of income? Well, here are a few ideas, both passive and active. Let's start with passive income streams. Think of passive income as planting a garden that requires some initial effort, but then it continues to provide vegetables with minimal upkeep. So, this could be in the form of digital products like printables or online courses, affiliate marketing, or even rental income if you have the resources for a real estate investment. Then there are active income streams. These are more like cooking a meal. They require your active involvement to produce results. You could consider offering consulting services, taking on speaking engagements, or developing new products or services that align with your existing business, but maybe tap into a different customer base. Active income streams are better if you need a cash influx right now. For example, you could offer a one-on-one service and start getting paid right away. Passive income streams often take a little time to build up, but they can continue to pay off for a long period of time. So take a minute to brainstorm. What skills, knowledge, or resources do you have that could be turned into another income stream? How can these be aligned with your current business model? Remember, the best opportunities often lie at the intersection of your interests, skills, and market demand. Diversifying your income is not just about financial security. It's about creating a robust, resilient business that can weather economic storms and capitalize on new opportunities. Our fourth strategy is to master the art of negotiation. Negotiation isn't just a business skill, it's a life skill. Whether you're asking for a late checkout at a hotel or haggling at a yard sale, you're negotiating. So let me share a little story. Early in my career, back in my corporate days, I often found myself in talks with potential vendors. I handled the marketing for the company, so I had salespeople calling on me pretty much every day. And I remember one instance in particular. A local radio station pitched me an advertising package. The initial price that they quoted was way out of my budget. So accepting the offer as is was out of the question. But instead of walking away, I came back with a counteroffer. I shared my budget and I highlighted the potential for a long-term relationship. And guess what? We struck a deal that was beneficial for both of us. I got a package of radio spots at a price that I could afford, and they got a long-term customer. I ended up doing business with them for years. So you've probably heard the phrase win-win. That's what you want in a negotiation. Both parties have to feel like they're getting value. Now let's talk about some practical negotiation strategies. Know your worth. Before you enter into any negotiation, understand the value that you bring to the table. This isn't just about the financial aspect. Consider the quality of your service, your reliability, and your brand. In that example that I just talked about, you know, my brand, my company that I worked for had a long history where we're very reliable. We'd been in business for over 100 years. So that was a key part of what we brought to the table. Second, listen more than you speak. Good negotiators are great listeners. Understand the other party's needs and constraints. This knowledge can help you tailor your proposal or your counteroffer to create a win-win situation. And be prepared to walk away. Not all negotiations are going to end in your favor, and that's okay. Being prepared to walk away is a powerful position. Know what your deal breakers are going in and stick to them. And then practice, practice, practice. Negotiation is a skill, and that means you'll get better if you practice. So try negotiating in everyday situations. Maybe you'll get a discount on a bulk purchase for your office or a better rate on a software subscription. Each experience builds your confidence and skills. Negotiation skills are a powerful tool to add to your toolbox. They can open doors to new opportunities and new partnerships, in addition to getting you better deals. Our fifth strategy is to plan for taxes and savings. This is not always the most exciting part of running a business, unless you're a number nerd like me, but it is essential. Before we get into the details of this section, let me mention that I highly, highly recommend the book Profit First. I started following the Profit First strategy a few years ago. I can't remember exactly when, but it has made a huge difference to my business, especially when it comes to being prepared for tax season. And I'll drop a link to Profit First in the show notes. So, you know that saying, nothing is certain except death and taxes? Well, it's true. Taxes have to be filed, taxes have to be paid, and that means that you need to plan for them. So I haven't always been super organized when it comes to my financial transactions. Actually, let me rephrase that. I was organized, I just wasn't always timely. I was that person who sorted through all of my financial transactions the first week of April and ended up filing my taxes on April 15th. So basically, I did a year's worth of financial work in 2 weeks. That is needlessly stressful, and I don't want you to go through that. Taxes are a lot easier to manage if you're proactive about staying on top of your financial transactions and paperwork. So here are some practical tips to make tax time more manageable. Keep separate accounts. You need to keep your personal funds and business funds separate. Full stop. This simplifies tracking your business activities and makes tax prep much easier. Quarterly estimates. Paying estimated taxes quarterly, it's kind of a pain, but it's also easier to manage than trying to come up with a huge chunk of money once a year. The book, Profit First, that I mentioned a minute ago, it has a system to help you stay on top of your quarterly tax payments. Stay organized. Keep diligent records of all of your expenses and income. And use digital tools to keep track of everything. You can use accounting software or My Finance Dashboard, and I'll drop a link to that in the show notes. It helps you keep all of your financial records organized. And consult a professional. Don't be afraid to ask for advice from a tax professional. They can help you stay compliant and possibly even save you money. The next piece to this strategy is savings. Savings are a critical component of financial security. You know this from your personal life. Savings protect against unforeseen challenges and prepare you for the future. Start by building an emergency fund. It acts as a financial buffer for unexpected expenses, and it can be a lifesaver if you run into tough times. Aim to save enough to cover several months of operational costs. Personally, I keep at least 3 months of operational costs, including my salary, in my emergency fund. Second, it's important to think about retirement, even as a solopreneur. Explore options like a solo 401k or an IRA. Consistent contributions, even if they're small, can make a significant difference in the long run. And then set up automatic transfers to your savings account. This way, you're consistently setting aside money without having to think about it every month. And finally, your financial situation will evolve, so you'll want to review it and adjust your saving strategy on a regular basis. This way, you can make sure that it aligns with your current needs and business goals. By staying on top of your taxes and actively managing your savings, you're building a strong foundation for your business's future. Okay, folks, before we wrap up, let's quickly recap the 5 smart money strategies that we've talked about today. And remember, each one of these is a stepping stone to greater financial health for your business. 1, embrace the art of budgeting. Budgeting is a roadmap to financial clarity and control. It helps you manage cash flow, prevent overspending, and make informed financial decisions. 2, invest in growth. Strategic investments in your business, whether in education, marketing, outsourcing, or something else, can lead to significant growth and open new doors of opportunity. 3, cultivate multiple income streams. Diversifying your income not only provides financial security, but also allows you to explore new markets and customer needs. 4, master the art of negotiation. Effective negotiation can save you money, open up new possibilities, and build lasting business relationships. And finally, plan for taxes and savings. Proactive tax planning and consistent savings habits ensure that you're prepared for the future, and that protects both your business and your personal finances. Now, let me encourage you to pick one of these strategies and start implementing it today. Whether it's setting up a new budget, exploring a new income stream, or even just opening a separate savings account for taxes, every small step counts. So get started. Choose one strategy that resonates most with you and your business needs. Take that first step. Your business and your future self will thank you for it. Thanks so much for joining me today. I hope you found these money strategies helpful. Head on over to tanyakendrick.com/10 to view the show notes. You'll find links to all the resources mentioned, and you can grab the free cheat sheet summarizing everything we talked about today. And if you enjoyed this episode, it would mean so much to me if you'd take a moment to leave a rating and review. And while you're at it, don't forget to subscribe so that you can listen as soon as the next episode is released. Have a great day. And before you go, if you like what you hear on the Productive Entrepreneur podcast, then come check out the Organized Business Toolbox. It's my monthly membership for solo entrepreneurs who want to feel in control and take imperfect action to move their businesses forward. When you join, you'll get instant access to the Training and Resource Vault, and a new toolbox or course drops every month. Plus, we have monthly Voxer office hours where you can privately ask me questions and get my direct feedback. If that sounds like something you need, the link is in the show notes, or visit TanyaKendrick.com, and I'll see you on the inside.